Ladies and gentlemen of the crypto space, we're live on a Wednesday, October 9th at 11:31 a.m. Okay, you saw the animation in the earlier X post. The dollar is executing the junk kick maneuver, the infamous junk kick maneuver. That's what it's so good at. But, massive butts coming in from left and right, big old butts. The weakness in the crypto market in the face of dollar strength is what you want to see. This is arguably a return to normalcy. The move for Bitcoin and the entire crypto space broadly post 2022 bottom correlated with an increase in liquidity as measured by a variety of prominent macroeconomists. That is that's a very glucose centric um, surge in market activity. And what do we know about this metaphor? Glucose, like if you eat some sugar, oh, you get the sugar rush and then you get the crash, but crash not in the sense of this, don't take it that far. Sugar is a form of energy. It's really what the body consumes as energy, and ATP and whatnot. But it is short lasting. So if you consume sugar, it gets burned pretty quickly. It's the direct form of energy. But I've been talking about like keto type of metaphor, which is a more healthier form of energy. And it's where, for the fun fact, it's where the body converts fats into energy, basically. So when the dollar strength that we experienced post 22 to let's say 2024, that was a very glucose centric rush in markets. The better rush, the more lasting and wrong type of rush in markets will be in dollar weakness, which is more of a keto type of energy for these markets. And that is what we're starting to see. We saw some glimpses of it, but today is just further confluence because we're seeing it, starting to see it over and over again when the dollar rallies, like up 100, 200 points. Um, and we see broad weakness. It's not like we're seeing significant weakness, ladies and gentlemen. So don't take what I'm saying too far. Bitcoin's at 200. If that's weakness, okay, that's very interesting. I mean, we got down to 61 and change. We're not back in the 50s, so it's not like it's significant weakness. So that is just something that is different about the Bitcoin price compared to certainly cycles past, but certainly in the context of the weakness we would have typically seen in crypto markets with a dollar impulse to the upside. As I've said many times, this consolidation and these wicks to the 50 SMA on the weekly are insane from a Bitcoin perspective. We've never had a drawdown. It was a breakup and barely a mean regression to the 50 SMA through all of 2024. Isolated outperformance is exactly what we've seen. Certainly, meme coin activity associated with internal capital flows. This is just player versus player, where you have basically a moderately positive sum, maybe marginally negative sum at times, but generally just a circulation of internal capital. Now, just as folks talk very often, much more recently than times past, about growing systemic liquidity, that's when things start to get interesting in the crypto markets. A surge of exogenous capital inflow. That's dollars coming into the space from external markets. And that is a precursor to endogenous capital creation processes. So, my excitement isn't about, oh, quote unquote, a bull market. It's so much more because what we have thus far is the setup for something pretty remarkable. The infrastructure that we have in place right now for endogenous currency creation is just staggering. It's a loss for words what's in place compared to times past, previous cycles, one could say. It's just the response time. Like, all right, you got a couple hundred billion flowing in, and you get leverage anywhere. You get credit anywhere. You get downside protected leverage, depending on the credit facility that you choose, be it what have you, Go, um, Frex, CRVUSD, Lamalan. There's a lot of different options for how to get leverage now, and still abracadabra's on the table, and I'm sure that's gonna be fun again. Magic, internet, money, MIM will do well, just as all of them will do well. The only condition that was required for all of that which survived to do well is that it survived. That's all infrastructure now. It's established, time tested, survived the most insane drawdown and deflationary impulse I think we've ever seen in crypto markets. How do we know it was the most insane deflationary impulse? Bitcoin below the 200 on the weekly. That's crazy. Folks thought that March 2020 was a drawdown. It was barely a 2 week blip below the weekly 200. Here, now in hindsight, it's a nice inverse head and shoulders at the bottom of sorts. This was a hell of a move below the weekly 200 for weeks, which was months actually, many months. And then exactly as we say, not, you know, move for move, but you had the breakdown, the break up through previous resistance. Here's a resistance here. The retest, which was a double retest, and then the higher high. So this was pretty much your confirmation entry point with trifecta of bullish confluence, the breakout, the retest, and the higher high. Let me show you the trifecta of bullish confluence. Breakthrough resistance, retest, and then the higher high, which was right there. This is about 30, 32. And that's so that is not the bottom, 100% off the bottom. So that's a good example of how you catch a lower price point after you identify confluence suggesting in you're highly unlikely, probabilistically, to get a lower low. Trifecta of bullish confluence is a very strong sequence of events indicating up from there more likely. So you'd be 100% off the lows, you'd be at 32, more likely than less likely for continued upward price action. And that is exactly what occurred. And we mean regressed into the 50 SMA. This setup, this staggering, I'm looking at the weekly, so many folks would call this a HTF high time frame perspective. I much prefer to look at the monthly, which is something most don't do. But even on the weekly, this perspective is awe-inspiring. Total threes up marginally on the day, which is pretty interesting. Bitcoin dominance falling a little bit. Ethereum a little bit stronger than Bitcoin today, not much, less than 1%. But it's the dollar that's the story of today, which is the forward-looking indicator on how the markets are structuring, or rather restructuring, in a backdrop isolated, range-bound crypto weakness, with the bigger picture being crypto strength is insane. The weakness is with the dollar appreciating rather than depreciating. 22 to 24, we saw strength in crypto markets with the dollar appreciating. Now we're starting to see it when the dollar depreciates. And I'd like to see a break below the 200 on the weekly, down below 100. Nice strong move, maybe to like 99. And then you get a retest, and then you get the lower low, which is the trifecta of bearish confluence. And if we see crypto strength with a dollar move like that, that's some nice confluence that we are entering what would be quote unquote called the bull market. Yeah, I know folks say we're in a bull market. What we're in is probably more granularly said as a strong market, a market of support, a market of robustness and strength. Capital is sticky. Capital is churning within this market, and you get your isolated small cap outperformance, of course. Capital reallocation from one to another on a market cap asset is going to cause significant price appreciation. But the real market move, the core, the meat of the market move is when you get a delta, a change in the overall liquidity construct. Now, we'll be more specific because we can be more specific. What is the overall change of the liquidity construct? It's all about dollars. Dollars, dollars, dollars. That's why we look at the dollar relative to foreign currencies. We look at that granularly as well, but the DXY is a nice generalized representation. But this is your crypto market barometer for exogenous as well as endogenous dollar availability. Marginally positive support, significantly off the bottom, let's say 120s to 170s. Nice $40 billion rip in overall liquidity. Ethereum marginally positive $84 billion worth of liquidity on mainnet. Follow the dollars. It's all about the dollars. Biggest business on the planet. And it's marginalized when inspecting crypto markets in favor of price appreciation. And that I think is an egregious mistake from a capital management standpoint. This is the most important inspection because when the market is responding to dollar weakness and you get the liquidity restructuring we're talking about right now, don't own anything. So the question becomes, how do you construct the portfolio so it's sustainable? That's more important because everything's going up. Everything goes up when you get the big liquidity restructuring. So that is what we've been talking about, especially over the last 2 years. You don't want to be frantic when everything is going up. You want to be ready, prepared, structured, positioned, sitting back and like, all right, finally, all the work I put in the last 2 years, now I get to see it play out. And that is a very comforting position to be in. So it should be comforting to be prepared for that as well. So we'll get a little bit granular today because unlike cycles past, I mean, what are we talking about? 20 and 21 was the cycle past, and prior to that, none of this existed at all. We could not have, we could not have this conversation prior to 2020. Let that sink in. This didn't exist. There was no DeFi llama. There was no markets. There was no liquidity. There was none of this. So this is all brand new. That's crazy. So, but the fact that we have this reality now means we can inspect it the way we've been inspecting it, and we'll continue to inspect it this way. Now, probably the starting point to think of is Base, especially because of Coinbase integration, and if it loads, if it loads, there you go. So 3.7 billion dollars, not marginally positive. Some 2% is a relatively large number from a currency supply standpoint. Base has and is continuing to experience significant exogenous inflows. USDC is exogenous inflows. So if you notice, everything else is marginal. Marginal means relatively small, and that would be endogenous currency units. So that is something that's quite meaningful, especially to a person like me, because exogenous currency inflows is means you're buying things. Great. Buying things is only part of the equation. The way I've encouraged people to construct portfolios is around revenue associated with monetary velocity, transaction fees, as well as interest on debt, and those types of fintech businesses that offer such products and services. So there is not much opportunity in that regard on base chain, which is just the takeaway, because obviously the frenzy of meme coins on base chain will continue, especially with significant capital inflows, exogenous capital inflows. And that is all centered around airdrop. There's no other infrastructure on base chain that is notable, in my opinion. It doesn't have a depth of infrastructure, doesn't have outs or very easily highlightable credit facilities or money markets or I mean derivatives, I guess to a degree, but it's all marginal, and you can see it clear as day in this type of chart. We're talking about dollar. Dollar's meaningful. It's 84 mil. 84 mil compared to 3.4 bill of USDC is a tiny drop in the bucket. And dollar is a very notable um, fintech product. They're on other chains. But from a base centric perspective, this chart screams absence of opportunity from a robust portfolio perspective. I mean, sure, you can have a robust portfolio from a meme coin standpoint, and that's okay. I'm not a person in that capacity to advise or instruct or educate on the construction of such a portfolio. That doesn't mean it's not mm, can't be done rationally. Doesn't mean it cannot be done rationally. It just requires a different mindset, very social and um, thematic type of mindset, and that's cool. But hopefully, the types of conversations I offer give something that's more additionally uh, robust. I would say, from my bias, that the way I construct a portfolio is more robust, but that might be biased. So at least it's an alternative of how to construct a portfolio. So just some 2 cents from a base chain perspective on how to approach the current market and really a forward-looking indicator of where these markets are heading. Now, second on the list is Arbitrum, which has a much more robust infrastructure of fintech products. You have deployments of MIM, cracks, even Ondo's product is there. These are all marginal compared to Tether, as well as USDC, which are the dominant exogenous currency units. DAI is an endogenous currency unit. But even that's marginal. So you have similar characteristics to base with regard to exogenous currency availability as well as endogenous currency availability. But at least the infrastructure is here, and that's interesting. So maybe I'll bring this thought up after looking at a couple of other chains, but that might be the story for 24, 25 is the great expansion. What does that mean? So you're going to get a flush of exogenous capital flows because capital flows from underperformance to outperformance, and equity markets around the world are underperforming for various nation state related reasons and geopolitical reasons. You could see that exogenous capital inflow trigger a very strong credit impulse because that's what it is. That's the terminology that is describes the behavior. And that's exactly what we're looking for out of China right about now. It's a very strong credit impulse to get their M1 back over M2. So that same phenomena occurs in any financial market, and that's what these crypto markets are, a financial market. So the story for 24, 25 could easily be a monumental credit impulse. And credit obviously is a bubble. But if we ever see like endogenous currency units created in these markets exceed exogenous capital, that would be an absolutely enormous period from price appreciation standpoint. That would just be weird. Number go very, very up. But as I said, that would be a bubble. Credit's always a bubble. And then, so you got to be careful with regard to longevity, sustainability, and resiliency of a constructed portfolio in that regard. The line is still in there, $3.671 billion, marginally negative, not even marginally, that's negative some on the day. Um, you know, PayPal is a big story going forward, and I expect that to be part of the equation over the next couple years, not PayPal specifically, but PayPal type products, where a meat space, a historic meat space type of company, creating their on chain product. And that's exactly what we're seeing out of Visa and their headlines. That's what we're seeing everything about what BlackRock is talking about. Is how do you get assets onto these markets to allow this price speculation frenzy to see where the prices of assets can go, um, price discovery, so to speak. Now, when they say assets on chain, what's the most interesting asset on chain? It's really dollars, in my opinion. That's the most interesting asset, and in so many regards, it really is an asset because of the liability construct that we use and we talked about to a great extent. So I think that's probably the most interesting takeaway here is the size of PayPal um, compared to USDC and Tether. It shows where their interest is. That's definitely very interesting. Avalanche is still relatively small compared to other chains, but it's right up there with the most important chains considering available liquidity. Marginally negative sum, same story probably as base. Uh, Primarily dominated by exogenous stablecoins, Tether USDC. Go over to Optimism, DAI presence, Dollar, Frax, mm, Liquidity been suffering. We'll see how their new Bold does. CRVUSD. So there is the endogenous currencies, but they're very small. But you can see the dominance from exogenous capital. That flip to endogenous capital is going to be very interesting and arguably the 24-25 story, in my opinion. What was Polygon's just lagging everything, 191 billion positive sum. Very interesting what Phantom is doing. Sonic could be, I expect Sonic to be very interesting. Anything Andre has ever done has always been interesting, whether there's been a fallout associated with premature code deployment or excessive consumption of test and prod is another story. But he's main actor. Everything, everything he's done has created a meaningful technological component of these crypto markets. His You can't even name a name to fame between Yearn and keeper product and the automation type of concepts and clearly solidly and what it became with aerodrome dominance. All of that was Andre. All of it. So that's something that should not be ignored. What's the exposure to Phantom? That's another story. That's portfolio construction, how you choose to expose to these types of uh, things that we talk about. How do you get exposure to exposure in terms of how do you make money off of exogenous capital flows? How do you make money off of endogenous currency creation? How do you get money off of a new chain or a new L2? That's a whole distinct conversation from the fact that we have exogenous capital, endogenous capital, and chains and whatnot. So that just always remember that. Let's go back to the charts for a second, see if I'm missing anything. Um, Gold moved down. Okay, that makes sense. But that's a return to normalcy because the gold move up was, I guess, dollar weakness, but I don't want to really think too much about correlation, inverse correlation between gold and the dollar right now. Too much. It's a little bit of a digression. But broadly, we're seeing the same exact relationship, an inverse correlation, dollar strength, and we're seeing gold weakness. Dollar's back at 102.8. That's a massive 2.8% move on the dollar in the last 2 weeks or so, more or less a week, as it's only a small bit above previous candle body close. That is a large candle, and it tells us something very meaningful. Look at the 10-year at 405, pushing right through 100 on the weekly. this is an interesting level, this 3.8 region, because that is where resistance support broke back in 2008, and then we retested to the upside. That's really interesting. I mean, but this is obviously early. This is a relatively high time frame chart. I think this might be one of the most interesting broad inspection charts. What does that mean? Like DXY, you could clearly look at currency pairs, dollar versus yuan, dollar versus yen, dollar versus euro, pound, whatever. But you look at DXY because it's high level, it's an aggregate, it gives you a general picture of what the hell the dollar is doing versus other currencies. And that's kind of the same with the 10-year compared to the entire yield curve. And everyone's going around talking about yield curve inversion, reversion, and the relationship in interest rates. And that plays into obviously the way the banks make money. So you could get granular. But I really like to stick to high level to get a mental picture of what the hell this system is doing. So this is a pretty interesting chart because this is it's a compression potentially between the weekly 100 and this level that was resistance back in '08. Isn't that interesting? We're literally talking about '08. So we're talking about us as a financial market, not just crypto, but the whole overall global financial market being in a crossroads. I mean, obviously, the whole financial system is always in a crossroads. Is it going to fall apart? Is it going to expand? It's always ready to fall apart. I've said that clear as day. We'll continue to say that clear as day. But this tells us something very constructive because this is position that plays into a level that was really set back in 2008. It's a very critical time in financial market history. There's still overall weakness coming off a significant high. There's the whole blow off top that we talked about from a 6 month candle perspective. And that was literally a smack right into the 200. It would take a lot to start to see a pushback forward five because he didn't get back there. And this is 6 month candles, ladies and gentlemen. So go back to the weekly. I think let's take a look at the monthly real quick. I mean, the monthly, maybe we see more weakness. This is a component of what I would say is the trifecta of a crypto bull market, which is treasury strength, treasury volatility collapse, and dollar weakness. We have a trifecta of bullish and bearish confluence from a technical standpoint, but we have a trifecta of global liquidity expansion as well. Treasury strength, collateral volatility collapse, move collapse, and DXY down. That's the weird zone, ladies and gentlemen, what folks have been calling the banana zone. So maybe this is the calm before the storm. Maybe we see a little bit more weakness in the treasury market into the 10 SMA and the monthly, up to 4.15%, which is not much higher than here, another couple of percent. Go back to the weekly. Wait, what were the moving averages doing? Bear in mind, that's a golden cross. 50 SMA cross of the 200 on the monthly. Oh, goodness gracious. So, my takeaway from this chart is we probably see higher highs and higher lows from a yield perspective. It's just going to be weird. Means your entire way of life is going to be different. 1981 until today, everything changes in that kind of environment. Kind of what that at least indicates from a moving average standpoint, and that's an increasingly high time frame perspective to consider that from. I would say from a short term perspective, weekly, clearly that's a shorter term than the monthly. We're probably at a crossroads between a the development of a secular trend, higher highs, higher lows on yields, but there's cyclicality in there. Now we have what looks like the cyclical appreciation of the collateral market. And look, you get down to 3%, and that's clearly a higher low, relatively local compared to October 18. I mean, maybe that's the low. Like you literally put in a low there. Let's put a line there. Horizontal line. You put in a low right here. Oh, Lord, ladies and gentlemen, you put in a low right there. There's confluence that support the the idea of higher lows and higher highs really setting in from a yields interest rates perspective. Sure, that's scary from a little bit more of a high time frame perspective. Interest rates are certainly scary, but that's also quite supportive of the statement that we're entering a new construct of global financials. That would be absolutely nutty. So eyes on that. Probably like end of 25, 26. You see 10-year start the bottom at 3.25. Oh my. So this is a weekly chart. On the monthly, how does that look? On the monthly, you have a very similar presentation, 50 SMA instead of the 200. So these candles are large. So it takes that amount of time for these types of chart structures to form. You need a bunch of candles, more candles on the weekly than the monthly, but still you need from a monthly, that's a good 24 candles. Just check back in about 24 candles and we'll start to get a sense. I'm not surprised. I'm in my 40s. We just came off 41 years of uh, of this type of world. Let me zoom out and tell you highest of levels what I'm talking about. I will paint. This is a world. This is a sense of normalcy for your life, how the world operates, how markets work, what products are interesting, what products are priced at what, inflation trends on consumables. It's a certain type of world. This talk speaks volumes about geopolitics. It speaks volumes about geopolitical tension, natural resource fights over natural resources. This was a different world as well. So, if we're here with this blow off bottom, quote unquote, maybe, then you see a new world form. So, what we're trying to inspect right about now, if we're entering that newer world, higher highs and higher lows, fall down, up into up into the 100, break down to the 200, and there's your cyclicality on the secular trend to the upside. Scary, could always be scary, but the only thing that you could possibly do to resolve such scary feelings is to understand what is occurring, why it's occurring, and what you possibly do in response to it. Let's clean up this chart, and then anything else constructive. Yeah, I showed you guys this the other day. Uh, we'll get to the Hang Seng because China's the big name in the game right now. It's such a misunderstanding of how the world works, or how the dollar and the way they manage it works. The U.S. was able to deleverage the United States financial system, 26% between January of 2020 and July. Holy shit! In July of 2021, like 2.5 years. 2.5 years, they deleveraged the United States 26. That's a monumental deleveraging. And that, do I have it? Yeah. Had they do that? M0. That's literally what I've been talking about. Because this money's already been printed at M0. Oh, they printed 75% of the currency supply. It's not really the way the world works. This going up is a deleveraging of the system, actually takes risk out of the system. The amount of currency units certainly plays into consumer price inflation, so it's meaningful to understand that from a capital management standpoint. But this is probably most meaningful from a stability standpoint. General public has their own considerations, but from a financial management perspective, you want to understand how fragile the system is when you have either a currency expansion to deleverage the system, or a currency contraction, which is a deflationary impulse. That means you're going to get some serious price depreciation across the board as people scramble for available currency units. So I think we're getting to the point where we maybe see a deleverage to a degree. I mean, let's take a look real quick again. Smacked right into that moving average from a leverage standpoint. I have a feeling that makes sense from a narrative perspective as well. The U.S. probably wants to keep leverage off the table. They need firepower just in case he gets systemic instability and they need to intervene in some way, shape, or form. So if you're not leveraged, then you're at a 5 on your Ave health factor. And you need capital for some reason or another. You need a bump at the 2.5. You can because you're at a 5. If you're running around at a health factor of 2, you don't have much firepower to work with. So that's what this chart indicates from a United States perspective. They have improved their health factor. So the volatility in Chinese stock market's absolutely insane. This is a 6-month candle. Let's go to the okay, okay. So the kicker is we know we're in a managed financial construct and we know everything fell apart in China, especially from a real estate standpoint. So in order for markets to organically start going up again, they need to stabilize currency flows, credit availability, and I don't think it's too early to say that the system is taking over. What does that mean? The system is separate from monetary authorities. Monetary authorities inject capital, affect credit, tell banks what to do with interest rates. Only in China can you lower real-time mortgage rates on persons. So for this to continue to go up this early in their intervention cycle, I would suspect that there's more to come from an intervention standpoint. But in either case, whether they intervene more or the system starts to expand by itself and M1 starts to expand through M2 and you get a large credit impulse in the country, that is not priced in from a deflation export standpoint. As their system starts to churn and have an impulse of currency expansion and financial activity, they're going to export relatively cheap products because that depends on internal consumption. But historically, China is an export nation. So if they're doing all this business activity and credits available and the factories could churn out products and internally people aren't buying it at the rate that the factories are producing it, oh, they got great ports, so they're going to try and export it. So when they're exporting all this production, uh, that's other current countries being tempted to import deflation. And that is something that other countries don't necessarily want to do right now, considering the downward trend in productivity across the world. I mean, we're not in global recession, but look at the weakness. You see the weakness in the GDP, and that's what the increase in interest rates around the world has done. It's what it's supposed to do. You see the complexities with consumption, the whole green movement, and that affects different types of energy desired and available to be consumed. All the complexities in Germany and France with the power and whatnot. But I think the last thing on every other country's mind is, I don't want to import deflation right now. We're trying to cut rates to get everyone's respective economy turning again and expanding. So the last thing they want to do is import deflation. So guess what they do? The exact same thing. We're entering the part of the multi-year cycle where instead of raising rates to combat inflation, everyone's cutting rates to combat the deflationary wave that's sweeping the world. And basically, this is a margin call moment. If you're the first out the door, you're not panicking. These boys are the first to try and create that credit impulse. And that creates the deflationary wave, exported deflationary wave. You'll see the cuts and it'll spread. And we already see that in the data. Mike Howe talks about this stuff. And plenty of others too, about who's cutting, net cutting versus raising. Japan can't raise, and that's just Japan. It's everyone. Everyone's going to have to cut. It's going to be cut, 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 cut. And at some point, it's the U.S. cutting, 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 cutting. So that's not new. That's par for the course. That's the same old shit. The takeaway there is let's see how well these countries have created infrastructure that's relatively resilient by interventionary facilities. So can they prevent some sort of isolated collapse? BTFP. How do you prevent the United States banking system contagion collapse? Back the FDIC and buy the banks. So they did that pretty well. I don't want to think about. We don't have to think about too far down the road and when instead of 10 banks, it's 500 banks, and you're left with just the GSIBs. That's a whole nother story. Anyway, I think that covers our macroeconomic sit rep for what is going on. I have two X pages we'll get to of what is most interesting to me right about now. Now, I talked about this briefly on because Bitcoin last night's stream, but obviously this is our stream, so we will rehash that. Crypto Blunder in the house. Hey, Cap, how are you? I'm first in class. Hey, Cap, I am DC in the house. Fugu, good morning. Present, Sir Joe. Happy Wednesday, Captain. Brian Morrison. No horns, no tail. Good morning. Assumes in the house. Good morning. How are you, my friend? Nikki, good morning, Cap. Getting my feet wet in the DeFi space for some time now. How's your interacting with the curve space? Curve, big weakness, 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 weakness. That's the takeaway. Back down at 25 cents. So complicated to manage capital. The best asset to buy isn't necessarily the asset that's going up. The best asset to so there's so many takeaways, and there's no knowing the future. Like it's kind of like the same argument with XRP. Everyone's screaming left to right, global adoption of the banks and XRP to 10,000. Fine. Listen, if that happens, we all missed it. So it's not to. That's something that I think about all the time. So the contemplation really must be the odds of things occurring, one, probability, and two, what do you want to own? And I think about that so often. And I've come to the point in my capital management career, life, whatever. I don't care about owning the most popular thing. It's quite the I want to own the thing that goes up the most price. And that's clearly a contrarian take. And in my life, I want to own the things that make the most sense to me. And I want them to become what they're going to become. And that's my sense of satisfaction. And that's why I'm comfortable with what I own. I appreciate it. I value it. And and that's as simple as that. So this is not a conversation nor channel that talks about, oh, this meme coin is going to the moon. It's so popular, the cultural trend. The kids love it. It's the hottest thing on the block. That's okay. Because in my constructed portfolio, when that kind of frenzy occurs, those dexes are going to be printing transaction fees. All right, grab some liquidity, throw it in as liquidity. Or if you have a DEX that concentrates those revenues, Curve, amongst others, V33s, you vote on the LP and you're getting the transaction fees. So that is how you are able to attach to the fastest horse and capture value. So a portfolio is about one, capturing value, two, you need to construct something that you appreciate and you value, and three, it needs to be resilient and stable. Stable, not necessarily in price, but stable in the sense of resiliency that it will continue to exist in the future. That's why I talk about the concept of XYZ. Z might be the most important. How likely is it to continue to exist in the future? So, in my perspective, not much else matters because I understand from a 4, 8, 12-year perspective where this whole global construct is going. So everything, anything that you want to own optimally merely needs to continue to exist in the future. Let me put that comment up because in the construct in the future where currency supply expands 10x, 50x from here, 12 years time, 16 years time, This is the early innings for infrastructure that facilitates transactions, credit, liability printing, or liquidity financing, or even derivatives. I don't really expose myself to too many derivatives, but that's another story. Can you please talk more about FXBs and potential value prop? FXBs are a big deal because they pay face value. It's the same. It's literally an on-chain bond, and that's literally what they constructed because they have their off-chain holdings company. So it's future dollars. That's what everyone describes bonds as. So that's literally what an FXB is. It Frax bond. So which means you get your so you have to have the inspection from a bond standpoint. When you acquire it, you're getting a discount to face value. It pays face value, so it's basically future dollars. So that means over, let's say you get a bond that matures in middle of 2025. So between now and 2025, if you hold an LP position between FXBs and a stable coin until maturity of the FXB, it's a no loss LP because they're just future dollars upon maturity. That's an interesting potential for those future currency units. Clearly, that's very reminds me of like IPOR, unfortunately. IPOR and the interest rate market, um, highly leveraged interest rate markets, which is a derivative market, which is like $700 trillion in notional size. Um, so it's very much off the radar of most persons, and it's isolated the Fractal predominantly at this point. And Fractal's growing TVL insanely, but it's off the radar of the whole meme crowd. It's a relatively sophisticated financial product, which means not a lot of activity. But from a financial product standpoint, it's quite significant. And it's a lossless LP, just as if it was stablecoin, stablecoin. That's something to keep in mind, especially as Fractal continues in market share. And remember, Fractal is a super chain, and super chain's a big deal. So I'm most interested not in particular chains. I'm really interested in where all these chains end up with regard to the concept of omni-chain. Now, bridging, your CCIP, big tech. I'm probably most, and that's really my. Is that my 2X post that I had? No, tapioca. So this was one of them. This was interesting. DeFi money. I missed the real time yield on Aave. They used to display it like this as well, but it was the Stargate integration of Phantom that was quite interesting. And really layer zero and tapioca is probably the most interesting technological thing I could think of in crypto right now. Omni-chain, OFTs, omni-chain fungible tokens. So the capacity, skip a bridge, and you're going through the contract of the protocol that executes a cross-chain message on layer zero, burns it on one side, prints it on another side using the cross-chain message. So that's what layer zero facilitates. So it's not a bridge; it's uh, it's an instantaneous transport. It can exist on one chain and instantly exist on another chain, relatively instantly, considering duration of message. But Stargate facilitates the liquidity. I don't know. I don't know how it's all going to play out, but the concept of omni-chain means it just is on another chain. And that's dependent on liquidity because you need liquidity pairs with that USD zero, for example, because otherwise, how do you trade USD zero for USDC? And you need once you have that liquidity, clearly everything has liquidity with like a USDC and a USDT is the predominant denominator. Once you establish that base liquidity depth, then you don't need USD zero paired with other things. That that's a part of the equation. I don't know. But that's the thing that I think is most interesting for 25 and 26. Reminds me of like December 21 narratives. See if I can find that. Narratives. Oh, that's not finding it. Here it is. Here it is. Narratives for 2022, and this was written in December of 2021. Nobody was thinking about this shit back then. Seamless cross-chain interrupt. This is 2021. So my interest in 2025 and 2026 is taking this to the seamless level of when it's not wait 5 minutes, 10 minutes, 30 seconds for a bridge. It's literally you're just going from chain to chain. But it's almost seamless cross chain. It's just you're everywhere. And you're no longer necessarily thinking in terms of cross chain. It's just it works. You want to buy something, you can. And if that liquidity's there on one chain, it doesn't matter. So I originally remember thinking in terms of, let's say you got 20 grand of USDC on mainnet, and you want to execute a transaction, sources liquidity from Base, Optimism, Fractal, Arbiter, and gives you your exchange back on mainnet. And that's what these cross-chain messaging protocols facilitate, giving my result. It just goes everywhere. So that is quite fascinating. This intermediate protocol managed arbitrage, cross-chain liquidity provisioning. That'd be so fantastic. We saw a couple protocols talk about this back in 21. Never went anywhere. Um, Liquidity provisioning, like that would be fantastic. Which is, but that's kind of like an ETF type concept. Deposit and it automatically manages the liquidity. I don't know where we are with that, especially with regard to my interest. I like to be in control, and I don't like ETF type deposits where it's managed, albeit at least it's managed by smart contracts, which are deterministic. This probably has urine written all over it at this point. Mem mitigation and capture systems. Oh, snap, did that come true? Oh my God, did that really come true? I mean, cow swap's insane. That's cow swap. Cow swap nailed that narrative from 2021. There's nothing, ladies and gentlemen, there is nothing like cow swap. Cow swap is in a league of its own. So it's not the most popular aggregator, but there's nothing that compares to what they built, in my opinion. And clearly, this played out because V33 is an iteration of the current monetary policy. The concept of voter escrow locking and distributing protocol revenues to depositors, to equity owners, quote unquote. And that clearly occurred for better or for worse, whether things are super bullish about it or not. But literally, that is aerodrome. That is what it is. It's an iteration of the current monetary policy. That's literally what Andre did, and that's what they all say. It's what even Tapioca talks about. You take the best of the convex and the curve and the what have yous. And convex is basically an iteration of curve or a wrapper around curve. If you want to get specific, but that sure as hell occurred. So all of this is literally playing out in real time, and that's it's quite interesting. Um, Hey, anywho, let's keep it going. Let's keep it going. Diego in the house. Hi, what do we do with extra cash? I want to increase weekly cash flows. Probably it's too late for a new investment. Plenty of investments all over the place. So my sentiment at this time is I don't want to chase shit. I have no need to chase. What have we been doing the last 2 years? Been trying to figure out a construct. And that construct is going to become what it's going to become. It's going to appreciate and depreciate along the way. And in 2 years' time, you look back and your construct will tell you as a source of truth how well it did. The last thing I want to do right now is chase the hot new thing. I don't give a shit about meme coins. That's okay. Let people that want to put in the time and effort to turn, you know, $1,000 into 10 million. That's fine. People can put in as much time and effort and work as they want. I'm okay with turning $100,000 into $1 million. Depends on your preference, time preference, risk tolerance, how much work you want to do, how old you are. Now, obviously, I say these types of numbers, but That number I just said doesn't resonate with a 20-year-old. They don't have 100 grand sitting around. When you get older, very different numbers, and I don't want to work. I want to be smart about capital management. Anywho, so let's try and answer this a little bit more specifically. What to do with extra cash? You don't necessarily need to buy things. Depends on your existing portfolio. Excuse me. How much exposure do you currently have to various markets? So my sentiment with regard to exposure is I'm looking forward to exposure to Sonic, and we'll get that from the Kingdom. Did I have that up? I did have that up. So what's coming? Kingdom V3 is coming, wherever it is, down under. Yeah, here. Kingdom V3 is coming. So what's the couple of interesting or most interesting things for me right now is Kingdom. And for Kingdom exposure, it's not any of the downstream protocols. I mean, you could always get something from them, but look at what's getting dropped to Aerodrome. It's a third party on Solana. Yeah, I know. I want to own 3 on Solana and some sort of uh, uh, liquidity financing product on Solana, but I don't know. I'm much more interested in Velodrome because it's cross chain. And what Velodrome's working on is like, I don't want to put in the work or the capital into another chain. So Velodrome exposure, Velodrome's going everywhere. It's the damn super chain narrative. Aerodrome is an aberration of Velodrome, meaning it's an out because base came online and they want to take advantage of base and become a dominant force on base. But that's not what Velodrome wants to do. They don't want to do the kingdom approach. They've put in the work for cross chain. So I'm very interested in what Velodrome's doing. It's lagging. Great. I'm not entering a crowded trade. So the Velodrome position has done quite well. It's treaded water with its, uh, uh, was it the router? What do they call it? Uh, where the where the heck did where did it go? Okay, hello. Voting, Velodrome. What do they call it? The locks, the relays. They call it the relay. So I'm very comfortable with the auto compounding. Great. It's marginal amount of capital. I so just compound, compound, compound. So it's treaded water. It's about, which is pretty remarkable considering volatility in the markets. So I like this product. Contention with Andre aside, they were one of the first out the gate with making things work. And it's deterministic, immutable, decaying emissions. I think aside from maybe the shortcomings that Andre pointed out, not consuming the best parts of his design um, are are there. It's true, but that's separate apart from there being substance here. That's my 2 cents on Velodrome. As for Kingdom protocols, it's Ramses. Ramses is the core of the kingdom. Ramses gets you your drops on other chain deployments. So that's the center of focus. I want to own things that automatically do work for me. So if V3 is coming out and you're going to get a drop on Sonic, you're going to get a drop on wherever the hell they want to go. In theory, they should be on every chain, and they can be on every chain because all it takes is a deployment. And Ramses is the center of the kingdom. Owning Ramses has gotten you Nile, Cleopatra. Uh, what's the thing on scroll? And Avalanche. So if we go here, you can see them all. Ramses dot exchange. Let's see their split. No, oh, it's Kingdom. They have different Ramses Kingdom dot one. That's a lot of deployments so far. Oh, we get Raw coming soon too, as well. Nuri was the scroll chain, and Pharaoh and Avalanche, and Ramses. First on the list, core of the kingdom, so to speak. It's a very nice splash. So I want to own things that automatically do work for me, whether it's people trading, people taking credit, or expanding protocols. And believe me, that why would they expand protocols somewhere else to another chain? Opportunistic, and that's okay. They have their exposure to the product that they developed, and I have exposure to the product that they developed as well. So that's cool. Um, want to increase weekly cash flows? It's XYZ narrative. Takes money to make money. Literally, you're talking about same thing we've always been talking about. If Airdrop's offering 50% compounded, that's cool. There's a lot of things offering 50% compounded. Interestingly enough, um, I deployed liquidity to Ramses. Why is it not loading? Is another story. Oh, I wasn't on Arbitrum. So I deployed Tapioca and Ethereum. I created an LP on Ramses, and I'm voting on it tonight. I mean, it's not. I what we've learned from voting is you only know after the epoch turns over. I don't know if these emissions are going to be what it's going to be. Only 200 with 1.4 million votes. I don't know about that one, but that could be interesting with these rewards. Like over $100 on a daily basis, because I'm literally the only one supplying liquidity. Why the hell am I the only one supplying liquidity? Where is everyone for an omni-chain credit facility and money market? How is everyone doing with regard to tapioca? That's literally insane. Got to be the most technological, aside from like Frax, which has suffered horribly in price. This has got to be the most technologically ambitious protocol in the entire crypto space. That's testnet is wild. They literally have some very innovative offerings just in testnet. I mean, testnet is literally the signature flow. I've never seen a signature flow like that. I've never seen an automation UI that facilitates automated sequence contract interactions like that. It's quite impressive, their test net. So, in any regard, this is like 200. The net result of this liquidity and voting is like 250% APR on basis. Um, so, there's a lot of ways to finagle and squeeze the lemon a little bit more. Uh, find so opportunistically, if you find an LP that is light and you're able to dominate an LP position, that can be quite lucrative. This happens to be a combination of already owned voting rights and dominating an LP, so that's kind of like the maximum squeeze, so to speak. So this is pretty interesting. Over $100 in revenue for the day, 206 in emissions, and I'm dominant LP. Um, and we'll see because it's a lot of volume on their Uniswap, $238,000 worth of volume, and only 10K. So that's pretty interesting because almost 5%, foreign change 4% of volume compared to Uniswap. So if Kingdom garnered a little bit more volume attention, it could be a hell of a revenue maker. Uh, so it also offers incentivized or financed liquidity. So it's something that's always important in my opinion. I see that as an entire business sector in these crypto markets. Just a takeaway that I think I will stick with. Now, obviously, there's been diminishing returns with regard to curve pricing, convex pricing, aura pricing, balancer pricing. But I see that as a critical offering from a fintech perspective of these crypto markets. Anyway, hope that helps, Diego. A couple of little interesting things that's going on. Killis, good morning. How are you? Hi, Dan. John, do you have any thoughts on BMX? No idea what it is. Take a look. EMX. Bitmart? Centralized exchange? Is it their private token? I believe it's centralized. No interest. I mean, it's like CRO. Is it like Bitstamp, Bithumb, one of the exchange's tokens? FTT? FTX? No, no, I don't know. What's the narrative? Was it cash flow, or was it like DYDX, where you get a discount on transaction fees? DYDX, that didn't work out so well. DYDX, DYDX. Maybe it's a decent product, but can't be staked. But look at the price action; it doesn't do so well. So that's not a product I'm interested in. I don't like those types of products. I just want to own foreign exchange, credit, dollar liabilities, derivatives, and liquidity financing. Those are FX businesses. Now, it's not going to perform the best, like a 10,000 million X on a meme coin. I don't care though, but that's the whole introduction to the stream. Not rationalizing underperformance, it's rationalizing sustainable, resilient capital management. Hope that helps. DA advisor, good morning, my friend. How are you? MN, Noah, moving your BTC to an exchange in order to sell the peak seems risky, as does post sale. Keeping on exchange and stables waiting for discounts. Is there a safer way to do this? Well, I prefer things like Spritz Finance, wherever the hell it is. I like Spritz Finance. Here in the States, obviously. So this is, I've had great, everything I've done with them is incredible. Bear in mind, they use Fed now. So if you could have, you spend $50 and you could transfer capital instantly. I mean, a transfer from here, you throw in like two, three, four, 5 grand, it is instantly in your checking account. So FedNow is interesting. Seeing integrations of it is also interesting. Instantaneous crypto to bank account. Plus, they have damn debit cards, Spritz card. Like, boom, throw it in, Samsung Pay, Apple Pay, what have you. Boom, you got a debit card. Throw stables on. Literally, you can throw $50 worth of USDC and go to the supermarket, and boom, you're done. So the harder part, it's imperative to have. I remember talking about this years ago, back in 21. How do you get someone into crypto? It's like first you got to learn how to spend it. Why? Because then you realize it's no different than a bank account, a debit card. This is a debit card. What's the difference between managing crypto on a hardware wallet versus an account? Account at a brokerage house, account at a bank, an account that's an account. And that was the whole takeaway that I was trying to express with that recommendation, that recommended learning experience. First, you got to learn how to spend it. Then and only then do you try and figure out how to make it. And that's why it's like I don't want to take on excessive work or risk associated with capital gains and trading. Just want to own the infrastructure and attach to narratives. Because once you do, you easily, or then you just get dollars, USDC, you spend it. This isn't from a United States perspective, but this exists in a lot of places. There's a variety of European versions, Riff, mono Riff, XYZ, I believe. Let's see if I still. Oh, that- so this is, I believe, is British. Oh no! Yeah, it's their new stablecoin. Oh, that's sad. Oh no. Anyway, I'm taking an emotional hit right now. Oh, Oh, they did a lot. They were one of the first DeFi accounts. That's really fucked up. Um, oh, 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 they got some VC. I mean, there's so many. I don't know what the hell this is. Okay, it's DeFi. They got some social media integration. Okay, eventually, at some point in you looking into that, you find a debit card, transfer some USDC, you go to the supermarket, you buy your food. Anyway, so yeah, I don't really mess with banks too much unless you need separate accounts. Separate accounts are meaningful. It's an entire separate conversation. Account management and like accounting is an entire conversation. You guys know I've spent some years on that. So commingling of capital is very important to not do. Isolated accounts so you could have audit trails and whatnot is very very important. DA advisor, you are correct, good sir. I am the only liquidity provider on Kingdom Ramses. I think there's a couple of smaller folks in there, but it's, it's my clip liquidity more or less. Um, other BMX Morphex. Let's take a look real quick. BMX. Is there another BMX? Morphex? Ah, you mean MPX. Morphex. Same thing. I accept all of the above. It's the same thing. It's the same thing. I mean, GMX? Y'all know about GMX, so all right, fine. So there's a lot of derivatives, perp exchanges. I mean, if you're talking 51 leverage, you're talking about a perp exchange, DYDX. Same narrative applies. I have no interest in these types of tokens, my friend. IDEN, yes, indeed. Oh, 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 oh. Okay. Um, Sentiment in that regard. I mean, Arthur Hayes doesn't own his GMX anymore. There's a reason. That boy likes the hot potato. That boy is a predator, and that is cool. That's okay when you have that amount of capital. You could easily be a predator and just take, 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 take. It is what it is. No interest. Hope that answers the question from my perspective. It's no interest at all. Ron Skapansky, got to get the emphasis on the right syllable, my friend. Thank you for your analysis. Always a pleasure. Could you recommend how to start getting invested in tapioca? So don't have recommendations with regard to how to start investing. I talk about the protocols that interest me. I talk about clearly the things that I own, why I own them, what I expect from them, how to start getting invested. That's a personal choice of how to spend money. I like to talk to folks in terms of what I do, which is a purchase, not a position. I buy things. So it's an imperative retraining, in my opinion, and I will do this for my kids, and I offer this to anyone who I talk to about capital management. Um, I I recommend the more sustainable mentality about asset ownership. I remember being younger, and I remember I don't know my original 401ks and whatnot, and my original bullshit that I did on stock markets and whatever, and brokerage accounts. Oh, buy some stock. No, 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 no. What do I want to own? And I've retrained my mind to really appreciate this perspective more and more. What do I want to own? What do I own? What do I own? I got three computer monitors in front of me. I got vitamins. I bought them. I own them. I own them for a reason. I have a car. I own it for a reason. What do I own? So that's the way I think about these assets. Even though they're digital, doesn't matter. It's an asset, but it's really fintech asset, banking products, forex products, credit products, yada yada yada. What do I want to own? And then comes the whole complexity of size and portfolio balance and And you know, size is imperative in risk analysis. Whole complex equation there is X, Y, Z. How much does it cost? How much is it paying? How likely is it to continue paying into the future? Um, a lot of assets fall into the speculative revenue category that are not necessarily paying right now, but could easily pay bountifully in the future. It's an important consideration. These, I don't, in that regard, I don't have recommendations for how to start investing, but I have guiding principles, best practices, uh, words of wisdom. And I am fond of tapioca from a technological standpoint. I think, as I said earlier, it's one of the most innovative technological offerings in the crypto space, comparable to to the degree of complexity that Frax has executed, which is an on-chain central bank of sorts. That's crazy. I mean, frankly, the technology at this standpoint is pretty impressive because it's become resilient. The instability, the financial loss in 20 and 21 was insane, but what has survived post 22 has been standardized and much less failure. In that regard, I'm quite impressed with the technology and how things are and continue to trend. So, so how could I recommend how to start investing? Is the appropriate statement or the appropriate question. Investing is not an easy practice. It requires patience, prudence, education, acclimation, assimilation of information. Y'all know how to do it. I mean, how do you invest? It's my opinion is good old cow swap. I literally talked about earlier that this is insane from a seamless cross chain, or rather, MEV protected transactions. You don't buy a Uniswap's gone, in my opinion. It's the I don't anyone who uses it just doesn't know any better. Great liquidity pools. This gets the liquidity from everywhere. I remember when 1inch came online, that shit was hot. And then Paraswap, but none of them compare to the technology that CowSwap has built. So buying stuff is easy. Buying stuff that fits into a holistic framework that can be presented during dinner table investing, where you can tell a story at the dinner table. That's another story. Do not You can't it's not investing. If you can't tell a story about what you own, why you own it, what's the significance of it, it's not investing, that's gambling. And I could only advise on investing. Become investors. Takes years, takes time. You're telling a story. You have to write your own story, chart your own journey, traverse your own path. Takes time. 4, 8, 12 years. You're 20. By the time you're 28 and 32, you'll have some interesting experience. Take your time and choose what you want to own based on rational, reasonable criteria. Hope that helps. Do you know anyone on the Spritz team? I do not. Will be cool to interview them on Leviathan. I would like to formally encourage that. And if asked, if they ask you, I do recommend them. I've used their service for very meaningful things. Literally, I pay taxes using their service, property tax. They're very As of right now, since Juno has had their banking complexity, Spritz is a very appreciated service. And you could say I said that. Always fun to say hello to the cat. Leviathan News is in the house. Why are they closing? Probably it's not, it looks like they're mutating. We're talking about monolith, I believe. But it's the whole whatever that policy is in Europe that's forcing Tether out. Mica, that's what it's called, Mica. Um, Stable coins, biggest business in it. Literally, it's the most contentious business because it's the payment mechanism of the government. So I'm sure that I just have no need to understand the crypto debit card landscape outside the US. It exists because if it exists in the US, the most contentious place on the planet for crypto, it certainly exists over there. And that is my preferred mechanism for consumption is a separate account, a crypto-friendly debit account, which Juno, for instance, has a damn checking account associated with it. Juno was a lovely, lovely product, and I think they'll be back better than ever at some point. I miss them greatly. These guys I used a lot. Lovely product. U.S. centric. You get a checking account, so you get you could ACH. You could do checking account transfers, treasury account. It was lovely. Oh, that's interesting. T-bill sweep. That's cool. So I look forward to them getting back on their feet. I mean, there's a lot. I mean, literally, you can use PayPal nowadays. PayPal offers a debit card. PayPal has their own stablecoin, so you can literally buy PYUSD on chain, transfer the PayPal, and just swipe their debit card. So you can do everything I'm talking about with PayPal. It's just that these are the smaller companies, and I happen to be fond of all these fintech products that have put in the work. Very, very interesting. That's the deal in that regard. Buddy, what's up, Cap? Always a pleasure. 12:52 p.m. on a Wednesday, October 9th. Yeah, Hurricane Day. Everyone cross their fingers. Tampa is going to be a complexity. I got very little to no risk down south, but today's the type of day that you extend good words of hope for very large storm surge. 15 feet of storm surge is insane. That is I don't even remember the last time I saw a 15-foot deep swimming pool, yet alone an entire city covered in 15 feet of water. That's insane. So this is going to be a hell of a day, just like in North Carolina. And coincidentally, I was literally just in Tampa. I was in the Barrier Islands, off the coast. Like uh, Anna Maria, Captiva type stuff. Man, that's going to be insane. And coincidentally, and can it be any more coincidental? I was in Asheville like a month and a half months ago. You can't make this shit up. So I got some my own sentiment in that regard. Asheville was beautiful, absolutely beautiful, and I, could I extend? I don't even have words for that amount of empathy. So this is going to be a big deal, and there's a whole lot of politics and that type of conversation that could be discussed, and that's something I clearly don't do. Um, but I think empathy around is very much worth it. So thank you all for joining Wednesday, October 9th, 12:54 p.m. 190 human beings on planet Earth were able to find their sense of rationality to talk about these insane markets from a logical perspective. So I appreciate all of you joining today. It's only Wednesday, so I will see you all on Friday. Safe travels. Hope anyone in the path of the storm is okay. And I will see everyone again on Friday. Till then, Captain out. Peace.